Brought to you by
Palm Marina Estates, Garuga, where luxury meets lifestyle by the water.
They say fortune favors the bold, but in the world of real estate, fortune actually favors the prepared. We spend months, sometimes years, scoping out the right land, chasing titles, and watching walls go up. But what happens when unthinkable decides to pay a visit? Whether it's a freak fire, a burst pipe in the high-end condo, or structural damage from a neighbor's site, your investment is only as strong as its protection. Tonight, we are moving beyond the tax mindset of insurance and looking at it as a wealth preservation tool. I'm joined by the managing director of MUA Insurance to talk about bulletproofing your portfolio. Nicholas, you and I know in this market the word insurance is often shunned by many people. Let's try and change the narrative. I've seen so many investors who have lost money by just one electrical fault or a natural disaster happening. Beyond the paperwork, when you sit down with an investor, how do you actually explain to them that insurance isn't a cost, but the only thing standing between them and losing everything they've ever had?
Okay, so quite a number of questions raised in one single sentence. The first one is being shunned away. That one we are guilty largely. Like I normally like saying.
You mean the insurers?
Yes.
Okay.
So for one reason or another, we sometimes are vague in communicating. So we get up losing the market. Some colleagues of mine think I'm a lawyer. I'm not a lawyer. So we are guilty by saying that. So the reason it is shunned is because of the communication. So simplification of the terminology, practicality of the products and services we are offering is the key to unlock that paradox. In terms of is it a cost and investment? That's a very valid question. The key thing is understanding what insurance does, and people are not going to understand it when we are making promises. They will understand it better when we show what we've actually promised, and we do that. So for instance, we show that by who we've paid in what timeline. At MUA we love doing that. The industry has moved quite a bit on that, so we emphasize that. The other thing is what is it that costs you to subscribe to insurance? We call it a premium. We've never explained what that means. So a premium is what you pay in exchange for insurance. Why is it a premium? It is a premium because you're buying a premium product. I look at the cameras that we have here today. They were bought at a substantial amount of money.
That's true.
The difference between these cameras and those that are insured is because the insured ones were bought at a premium. So at a small fraction of what you bought the camera at, let's say the camera was 10 million. And then you're told to pay an extra 100,000 on the 10 million. It is a premium camera, meaning anything happens to it, it will get replaced.
I am sure that it will get replaced
without you looking for the 10 million. So it is that simplicity that we want. Say, do you want to buy a camera or you want to buy a premium camera? That's when insurance bridges the gap and gives that assurance.
We've all had the skeptics say insurance is easy to buy but hard to claim. If a disaster happens tomorrow, what is the golden rule for MUA to ensure a property owner is reinstated without a 3-year legal battle?
That's that's the golden egg in the whole conversation, because we do have this historical verdict hanging all over us that claiming is hard. It is extremely tedious. You have to know someone. The whole thing is about the system in which you operate. These days there are so many channels that watch the way we work. It is very competitive. So you cannot hide behind clauses and borderline decisions. The
regulator is biting.
It's not.
It's watching.
It's actually the regulator is the last one to worry about. The competition is waiting to take over your customer.
That's true.
I always tell my colleagues, we cannot defend ourselves. we are already convicted by the public court.
Yeah.
Even if we won in the state court, the public court has already convicted us. We have to manage expectations well.
Nicholas, let's talk numbers. For an investor watching us out there, are there building designs that can actually be incorporated to pay less premium? For example, incorporating smart firefighting systems, monitoring systems on a property. How can we build smarter to pay less premium?
The more improved the risk profile is, the more affordable insurance is. And I also wanted to emphasize something, that people who have no basic risk management in place do not qualify for insurance. Insurance is not
that is very key.
What substitutes your basic day-to-day. That insurance will be very expensive. Insurance is meant to be what comes when everything fails. That means you're doing something and you're getting this watchman, the 911, to come in when things have really
you've really
failed.
Exhausted every protection there is that you can have.
Exactly. So the key thing is not only in making premium affordable or cheaper. The key thing is, how do we make the verification easier? So for instance, if you have a surveillance system around a property, and you have a cloud storage for the clips, it makes your risk profile more readable. Because part of the reason why traditional insurers would delay to pay claims is they had this sense of foul play, that supposing this guy set the house on fire deliberately. By you being transparent and setting up these mechanisms, it makes you an easier customer to deal with.
It's easy to focus on the tiles and paint, but the most important part of any building is the foundation. And sometimes the foundation is a solid insurance policy. Don't wait for the smoke to realize you're uncovered. We'll be right back with more on Property 360.